NIO just did what? This is insane. Why NIO shares jumped double digits this week. NIO's May 2022 deliveries trailed its peers, but there's reason to be optimistic. So what exactly happened? What are NIO's global expansion plans? Where will NIO stock be in 5 years? Well, if you are a NIO stockholder, then this video is for you. So welcome to Stock Market News, where today we will discuss and analyze the future of NIO. So let's begin, guys. Before we jump, make sure to subscribe to the channel and press that bell icon so you'll never miss any updates. Now, without any further ado, let's jump into the video. This week, NIO at 3.89%. Shares continue to rise from 52-week lows. The Chinese electric vehicle maker stock was roughly 14% higher for the week, heading into Friday's trading session. NIO released its May 2022 delivery figures on Wednesday, and the results were mixed. However, certain hurdles may be in the rearview mirror now that Chinese cities such as Shanghai have reopened after being closed to halt a new wave of COVID-19 cases. Many Chinese automakers were unable to produce as a result of the lockdowns since parts suppliers ceased operations. However, things should improve from here, and investors have brought into the stock in anticipation. The manufacturing delays hurt automakers across China. However, peers XPeng and Li Auto both delivered far more vehicles last month than NIO. NIO supplied 7,024 EVs, representing a 5% increase over May 2021. XPeng and Li scored 10,125 and 11,496 points, respectively. This was a 78% increase for XPeng and a 166% increase for Li Auto year over year. But that appears to be the last of NIO's terrible luck. Following high order inflow and the lifting of supplier lockdowns, the company expects to increase production capacity. With the situation improving, it also expects to accelerate the delivery recovery beginning in June. Investors appear to be looking ahead, which has helped the stock rise this week. NIO watchers will now turn their attention to its first quarter financial and operational update, which is scheduled for the following week. After 2 months of lockdowns in China, it is time for manufacturers to restart regular production activity, and electric car maker NIO has been waiting for this for a long time. Because of the lockdowns, NIO suffered more than it should have, and its April delivery numbers dropped dramatically. NIO stock is rising as the firm prepares to disclose quarterly earnings next week. After a hard few months, the stock has risen up and is up 11% in the last week, trading at $17.39 today. It hasn't gained much in the last 6 months, but this could be the start of a positive trend. If you haven't already, now is the opportunity to buy NIO stock before it announces its earnings. Let's take a closer look at my bullish thesis on the stock. NIO has published May delivery figures, which are higher than expected. The company delivered 7,024 vehicles throughout the month, which was much more than the previous month. It has supplied 37,866 vehicles so far this year. Remember that the corporation had to halt manufacturing in April owing to lockdowns. It also intends to increase production capacity and improve delivery beginning in June. According to Bloomberg, China saw a reduced rate of contraction, implying that the worst may be over as the country prepared to ease off on the lockdowns. This could be a game changer for NIO. The corporation will be able to restart normal manufacturing and increase monthly deliveries, which will benefit the bottom line. There is no doubt that demand for NIO cars is increasing, but the company has been unable to meet this demand due to lockdowns and supply chain challenges. However, once these issues are resolved, NIO has a promising future ahead of them. NIO has already stated that it plans to expand throughout Europe, and it currently has a strong presence in Norway. The company intends to open another NIO house in Norway in the near future. It also intends to expand into the Netherlands, Germany, Denmark, and Sweden this year. NIO intends to establish a facility in the United States in addition to Europe. According to DigiTimes, the company is looking for experienced professionals to help set up production in the United States. If this is accurate, the company will undoubtedly go global and in a big way. It also implies that NIO will have a very busy second half of the year and that this might be the start of a period of rapid growth. Mizuho analyst Vijay Rakesh has a buy rating on the company with a target price of $60, representing a significant upside from the current level. According to the analyst, the supply chain and manufacturing are recovering, which indicates the company could return to pre-shutdown levels this month. NIO, in my opinion, is one of the top EV manufacturers with enormous development potential. It will take some time for the company to disclose excellent fundamentals, but as long as monthly deliveries continue to climb, there is much to be excited about. It already has a competitive advantage in the business and is planning to expand into numerous countries. Purchase NIO stock before it becomes too pricey. NIO is likely to reach profitability in the next years, which will be the primary medium-term re-rating catalyst for the stock. NIO stated on its Q4 2021 conference call that it intends to achieve break-even or profitability in 2024 for the full year. This is in line with S&P Capital IQ's consensus sell-side expectation. According to sell-side analysts, NIO's revenue will expand at a plus 51% CAGR from RMB 36 billion in fiscal 2021 to RMB 187 billion in fiscal 2025. Because of economics of scale, NIO's headline reported gross margin is expected to increase from 18.9% to 22.4% during this same time. Financial projections for 2026 and beyond are excluded because there is just one expert providing predictions. The sell side anticipates NIO will improve from a non-GAAP adjusted net loss per share of minus RMB 0.52 in fiscal year 2023 to normalized earnings per share of RMB 1.48 in fiscal year 2024, before increasing by plus 906% to achieve an adjusted EPS of RMB 14.93 in FY 2025. However, there are dangers that could cause NIO's profitability to be delayed. NIO has traditionally targeted the premium portion of the Chinese EV market. If NIO is to grow its sales at the rate that the market expects, it must be successful in its efforts to penetrate the mass market segment. The debut of the ET5 model by NIO is a critical step in the business's strategy to capture a piece of the mass market EV segment in China. The company stated during its Q4 2021 earnings call that ET5 has attracted a bigger and more diverse customer base. However, it's too soon to assume that NIO would be able to compete effectively in the mass market area. At the company's recent fourth quarter results briefing, NIO recognized that its mass market EV strategy has to be efficiency driven. NIO has stated that it must rethink the core design of our product in relation to the mass market, which includes elements like materials and production processes. In other words, if NIO does poorly in the mass market EV area, it may have slower sales growth and take longer to attain profitability. In the medium term, NIO is predicted to increase in 2022, albeit at a slower rate than in 2021. According to the chart below, sell-side analysts have been lowering NIO's top-line projections for 1H 2022 following the company's Q1 2022 deliveries and Q4 2021 performance. Analysts also anticipate that some of the company's revenue will be delayed to the second half of the year, as seen by a rise in consensus sales projections for Q3 and Q4 in 2022. According to S&P Capital IQ data, the market consensus forecasts NIO's revenue growth to decrease from plus 108% in fiscal 2020 and plus 122% in fiscal 2021 to plus 75% for fiscal 2022. A variety of variables contribute to NIO's weaker top-line growth this year. Supply chain disruptions and chip scarcity difficulties are projected to have a significant impact on all companies in the global automobile industry, including NIO. Furthermore, aside from the ET7, which is expected to begin deliveries in late March, the company's other two models, the ET5 and ES7, are only scheduled to begin deliveries in September 2022 and Q3, respectively, according to management comments during the recent Q4 earnings call. As a result, deliveries and revenue are naturally weighted towards the second half of the year, which explains NIO's modest revenue growth on a full-year basis for 2022. In short, NIO expects to increase its top line and enhance its profitability over the next 5 years. However, the company's share price success in the medium term will be determined by the rate of revenue growth and the time required to become profitable. Alright guys, that's pretty much it for this video. So if you like this video, make sure you give it a thumbs up, and don't forget to smash the subscribe button and hit the bell icon to get the latest updates. And thanks for watching!